The strategy I'm going to be showing you in this video is a strategy that I have been using for over 3 years now, and it is a strategy that made me a profitable trader. And since I stumbled upon this strategy, I have not left it since. The strategy is called BTMM, also known as the Beat the Market Maker strategy. It's not ICT concept, it's not SMC concept. It's a less popular strategy. It's gonna be difficult for you to find it on the internet, although a little bit of it is there, but most of the information about the strategy is not really out there on the YouTube space. It was created by a guy called Steve Moreau. And in this video, I'm going to be explaining just a little bit of the strategy so you can get a concept of how it works. It's something that I have been explaining on my YouTube channel for a very long time, since the very first video that I did on my YouTube. Like I said, I've been trading this strategy for about 3 years now, and I have not left it since. You can see the evidence on my YouTube channel. Just scroll down to the first ever video I made on YouTube. You're gonna see I'm still talking about the same exact thing, with some improvements, some adjustments to make it better. But it's the same concept that I've been working on. Now, one of the signs of an unprofitable trader or someone that is just starting out or doesn't know what he's doing is you're going to notice the person is just jumping from one trading strategy to another. Today he's using ICT, tomorrow he's using SMC, next time he's using support and resistance, then other blocks and supply and demand and all those other things. That's a sign that that person is not profitable, and most likely that person is just, especially if the person is on YouTube, does know that person, that trader is just posting content to make money from mentorships and YouTube. All right, so that's one of the signs of an unprofitable trader or someone that's just making content, right? Some people tell me that I'm just a content creator on TikTok or on Instagram. The thing is, you can't break down complex stuff on Instagram or on TikTok. Those things are just for short form content. The main information is here on YouTube, where you get the in-depth breakdown of everything that's going on. So without wasting any more time, if you're new to the channel, make sure you like and subscribe. Like and subscribe. If you have any questions at the end of this video, make sure you leave a comment. I'll be sure to answer the question. So now, what exactly is this strategy? How does it look like? What is it? So pay close attention as I break it down. Now, the way the strategy works, the foundation of the strategy comes down to this. So now, first of all, you need to understand that there are three main trading sessions. There are three main trading sessions in the Forex markets. All right, there are three main trading sessions in the Forex market. I think also in the crypto markets and all those futures and synthetics and all those other markets, there are three main trading sessions that most people know of. It's called Asian session is the first one. London session is the second one, and New York session is the third one, right? So where most people usually get confused when I say this is due to their lack of understanding. They say that they are, sorry about this spelling. They say that there are like 4 or 5 sessions. So what they say is that there's Tokyo session, Kyoto session, and Sydney session. Sorry about that. Sydney session, right? So they say that there's Tokyo session and Sydney session, and then there's Asia session, London session, New York session. Due to lack of understanding, they don't understand that Tokyo session and Sydney session is all part of the Asian markets. It's all part of the Asian session, right? It's Asia, so it's part of the Asian session. They're all combined into this. So when I say Asian session, it's talking about everything together, right? So it's Asian session. Sorry about that. It's Asian session, London session, and New York session that are the main sessions that people trade on the market. Now, knowing that there are three main sessions, we need to also understand the characteristics of each session, because the sessions are not just there for being there, right? The Forex market is traded in sessions. Each session has its characteristics. Each session has how it behaves, right? So each has its own behavior. Now, the Asian session is mostly known for consolidation, or some people like to call it accumulation, sideways movements, right? So the Asian session is known for consolidation, accumulation, while the London session is known for being the breakout session, or known for its high volatility. High volatility, right? And then New York session. New York session is where everything, I mean, at the end of New York session is where everything dies down. But at the beginning of New York session, where you have news, you can see some form of volatility there. But the New York session is mostly known for reversals, and continuations. So sometimes it reverses the trend, and sometimes it continues the trend. But what usually makes New York session move is usually news, high impact news, red folder news. If there's no red folder news, sometimes you're not going to see any movements, or you're not going to see much movement on the New York session. All right, so these are the characteristics of each session. Take note of this. Make sure you take note of this. This is very important. So we have Asian session used for consolidation and accumulation. London session is for breakouts, high volatility. New York session is for reversals and continuations. Now, how do we look at this on the chart? How does this look like on the chart? You need to also understand how it looks like on the chart. Now, I told you that Asian session is known for its consolidation, low volatility, and accumulation, right? How exactly does that look like on the chart? Now, Asian session lasts for about 8 hours. So Asian session lasts for about 8 hours. So what usually happens is during that 8 hours, price is usually in consolidation. And what does it look like? What does consolidation look like? We all know what it looks like. Higher highs and equal highs and equal lows going sideways like this for about 8 hours. About 8 hours. Right. This is Asian session. This is the start of the day. This is usually where the day starts. So let's say this line signifies start of the day. This line signifies the start of the day. So Asian session is the session for consolidation, and it's also the session that sets the initial high and low of the day. So if this is the start of the day, then this is going to be the initial high of the day. It's going to be the initial high of the day, and then it's going to also be the initial low of the day. So this is going to be the initial high of the day, initial low of the day. What usually happens is coming into London session, which we know as the breakout session and high volatility, you're going to get some volatility there, and you're going to have a breakout during London session, coming into London session. Sometimes a little bit before, sometimes a little bit after. But the session is known for its breakout. So what usually happens is after price consolidates during here, coming to London session, you're going to have a breakout. Let's say price breaks to the upside, right? Price breaks to the upside. That's our London session. Now, remember, this was the initial high, and this is the initial low. Now, this is no longer going to be the high. The high is going to be extended with London session. So the high is going to be broken and extended with London session. So this is going to be the new high that's going to form here. This is going to be the new high that's going to be here. This point here is going to be the new high, right? This is going to be the new high. So what usually happens is coming into New York session, depending on where the market is, if the market is still at this high, coming to New York session, then New York session is going to be used to reverse this back down. But if they've already started reversing this back down, what you're going to notice on New York session is you're going to notice price is going to do a slight pullback coming to New York session, and then it's going to continue the trend. So that's why I said that New York session is used for reversals and continuations, depending on where they are at the time of the session opening. If price is still at this high, they're gonna use New York session to reverse. If price has reversed already, they're gonna use New York session to continue. But before they continue, they usually do a pullback and then continue down. So now this is the basis, this is the foundation of my trading strategy. This is the foundation of BTMM. Now, why does the market usually give that pattern? Now, I've explained this in multiple videos. The reason why market makers or price action does that move, does this move, all right, is because what happens is if you believe that the market is manipulated, if you believe smart money concepts or smart money, let's say ICT concepts, right, which is basically just the concept of manipulation, market makers manipulating the market, inducing you to take liquidity and then move in their direction. This is one of the ways of generating liquidity. How? What happens is liquidity is generated during this consolidation. So it's called accumulation because they're accumulating contracts, they're accumulating orders. So buy and sell orders are being accumulated inside this area. How? because people are buying and selling. People are buying and selling inside this range. People trade, some people trading support and resistance in lower time frames, selling at this high, buying at this low. So people are going to be buying and selling inside this range, which is going to create liquidity above and below. Some of you know equal highs, equal lows gives you liquidity above and below those equal highs and equal lows. So there's going to be liquidity above here and liquidity below here. So in order for market makers to exploit this liquidity, they have to manipulate this market. Some of you know, some of you call it AMD, accumulation, manipulation, distribution, where they accumulate during the Asian session, manipulates with this false move here and then reverse back down, right? So this is the foundation of the strategy. If you want to learn more on this, I have other videos on my YouTube that goes in depth into this, but I'm not going to be breaking this down that much in this video. I'm just going to be showing you the patterns that you need to be looking for when trading this strategy. So now, there are variations of that same pattern, right? The two patterns that I'm going to give you today are the ones that you're going to be looking for on the charts. So when you're trading, when you go on the charts after this video, you can go and backtest this, look for this on the charts. So the first one is this. The second one is, let me just duplicate this so that the boxes can be even. Right, so I'm going to be showing you the two patterns that you're going to be looking for because they're going to always give you the same thing. They're going to switch between this one and the other one. So the first one is you're going to have consolidation here. Price is going to break to the upside and it's going to give you an M formation and then it's going to reverse back down. Right, this is the first pattern. This is the first pattern. The second pattern is where price is going to consolidate during Asian session, right? Then, or let me break this down into a better way. Now, the second pattern works like this. The Asian session is broken down into two segments. How? If you draw a Fibonacci from the high to the low of this Asian box, you're gonna notice that this is gonna be the 50% mark of the box. So that basically that's the middle of the box. So this is gonna be the middle of the box. Sometimes what happens on the chart is instead of consolidating in between from high to low like this, what happens sometimes is market makers or price action can choose to consolidate at the upper level of the Asian range or at the lower level of the Asian range. So we're going to call this upper level. We'll call this the upper level. And then we're going to call the one below the lower level. All right. So the Asian range is broken down into two levels or two segments, the upper level and the lower level. Now, price can give you different variations of consolidation. So there's a variation where they're going to be above this high, sorry, they're going to be at the upper level consolidating. There's one that they're going to be at the lower level consolidating. And then there's one that they're going to be just in between like this. So now you can kind of predict where the breakout is going to happen by understanding these concepts, that there's the upper level and there's lower level. All right. So if price is at this upper level, by the time the London session is coming up, then you're going to get a breakout to the upside. If price is at the lower level during London session, coming into London session, you're going to have a breakout to the downside. If price is consolidating, bouncing up and down in between, and there's no clear positioning, it's not at the upper level, it's not the lower level, then at this point, you can expect the breakouts either to the upside or to the downside. It's going to be random, anyone that they give you, right? So these are the various ways in which market makers work inside this Asian box. So there's the upper level and there's the lower level. Usually when you're going to have this upper, where you're going to have price bouncing in between the upper level and the lower level is when the Asian range consolidation is tight. If it's tight, you're going to have something like that. If it's not tight, then you're going to have upper level consolidation or lower level consolidation. Now, I just wanted to explain that so that you can probably understand what I'm going to explain in the next video. So in this next pattern. So this is the first pattern here, which is the one that most people know about. Is what you call AMD. There's a variation of this pattern that most people don't know, and that is the one where you're going to have consolidation, but now what's going to happen is the consolidation might happen at this lower level, right? Or let me just break this down in a better way. this is the pattern. You're gonna have consolidation, and then coming to London session, you're gonna have a first leg here, and the second leg here, and the price is gonna reverse here. So the first one, they broke out and gave you this M formation here. The second one, they didn't break out. They just maybe stop underneath it a little bit or tap the highs of the box and then reverse off of there. And then this is your M formation. Right. So this is a pattern that can happen. This is the second pattern. So this is the first one. This is the first one. This is the main one. And then this is the second one. So market makers, price action can choose between the first one and the second one. All right. So if you can identify this first one, good. If you can identify the second one, that's also good. If you can identify both and trade both accurately, that's even a better way of doing it, right? So now this first one, sorry, this second one here, this one has different variations. You just have to understand. I'm breaking this down in variations so that you guys can understand the different patterns that they're going to give you on the chart, because they're not going to give you something picture perfect every single time. That's the problem that most people make. They're looking for picture perfect patterns. You're not going to get picture perfect patterns every time. Yes, sometimes you will get picture perfect patterns, but you're not always going to get that. You have to use your mind, use your brain to understand what is actually going on the chart. And that's why I'm breaking this down for you. So now what happens is the variation of this second one is where you're going to have a lower level consolidation. You're going to have a lower level consolidation. And then coming to London session, you're going to have something like this. And then price is going to reverse back down. All right. So what this is basically is you basically have this pattern here, this number one, this type one. Basically, this is the same thing as this, but it's hidden because they didn't break outside of the box. But it's the same thing. If you shrink this thing back down, I only count this consolidation, you have the same thing. But because they hid it inside this box, some of you might not see this. So that's why I'm showing you this so that when you go on the chart, you can be able to identify this. This is where they consolidate at the lower level of the box. After consolidating at the lower level of the box, you're going to have a breakout. So this is going to be the first move, right? But they're not going to break outside the Asian box. They're not going to break outside the Asian box. They're just going to break out, come and tap the highs, and bounce off of that highs, give you the M formation and reverse. All right, so that's one way of it happening. Another way that can happen is you're going to have consolidation at the upper level of the box, and then they're gonna break down and then break back up and then give you the M formation at the same highs. All right, so they're gonna give you different variations of this pattern, but all you need to understand now is I've explained that there's an upper level and lower level. Try to identify if price is at the upper level or lower level, and then look for this pattern, this type 2 pattern here. All right, and then where you're going to be entering your trade, you're going to be entering your trade at this high and at this high here. This one is easier to see. If you're new to this strategy, I recommend you go with this one first, and then this one. This one is this one is more difficult to identify, but this one is easier to identify on the chart. So these are the two patterns that you should be looking for on the charts. All right, the first one is what you call AMD, or what you know as AMD. The second one is a variation of the AMD, but in a different way. All right, so now time to look at some examples on the charts. Now, just before we move on, let me just show you. There's a trade I took today. Right? So you can see I trade what I teach, basically. All these things I explain to you guys on YouTube, I trade them. It's not like I'm trading one other strategy and then teaching you guys another thing. What I trade is what I teach. So now this was a trade that I entered. This is a trade that I entered today, although the market was quite slow today. I don't like the price action, but this was a trade that I entered. Now, what can you look at? What can you see in this? What can you see in this? If you zoom in like this, right, we can see, oh, you know what we're going to do is, so this can be clearer. Let's go to the same currency pair, but on a cleaner, on a cleaner uh, chart, on a cleaner chart. So Let's see. All right, so what can we see here? What's the pattern that we see here? Now, remember I told you this is the start of the day. This is where the day starts. This vertical line here that you can see here, that's where the day starts. So now I told you that Asian session lasts for about 8 hours. If you count here to here, that's about 8 hours. So I told you it's mainly for consolidation. So let's draw out our consolidation here to here. I think that's the 8 hours. Yeah, it's around here. That's our 8 hours of sideways consolidation. Now, coming to London session, what do we have? After price consolidates inside this range, Now, are they at the upper level or lower level of this range? Let's look at this. Where's the middle of the range? We have the middle of the range here. Of the middle of the range here. So this is the middle of the range. Let me make it thick so you guys can see it. So this is the middle of the range. Now I told you that if they consolidate at the lower level of the range, then you're most likely going to have a breakout to the downside. If they consolidate at the upper level of the range, you're going to have a breakout to the upside. So now looking at this, what can you see here? What do you see? We see that price initially was bouncing off of the middle of the range, right? And then what happens at the end of the Asian session, price goes down to the lower level of the range and begins to consolidate there. I told you, if they're consolidating at the lower level of the range, you're going to have a breakout to the downside. Now we have the breakout to the downside, and then after the breakout, what do we have? If we change this to a line chart, you can see the exact W formation that I told you guys about. This is the W formation that you get, right? So you have this W formation. You have this W formation. Price goes like this, goes like this, goes like this again, and then reverses back up. Where did I enter this trade? Enter this trade here. Remember, I told you guys you're going to be entering on the second leg of the pattern. You're going to be entering here, taking this back up for my stop loss was like down here. So TP is about here. So you can see this was a clean, very clean trade. Very, very clean trade. Now, this is a very good example of the first one that I told you about. Now, the second one, if you look here, you can see the second one being applied here. So now let's look for 8 hours of consolidation. Let's count here to here. 8 hours of consolidation, which is right at this area. So let's draw our box, our Asian range from the high to this point here. So this is our Asian session consolidation. So this is our Asian session consolidation. Now, what can we see here? Let's find the middle of the range. Find the middle of the range. This is the middle of the range here. So this is the middle of the range. What do we have? Price started the day, went to the upper level of the range to consolidate. They came later to the bottom part of the range to consolidate at the ending of the Asian session. To consolidate there, I told you if they're consolidating at the ending of the range, at the bottom, sorry, at the lower level of the range, then you can expect a breakout to the downside. What do we have? Price breaks to the downside and then eventually comes back up. First of all, gives you a W formation there to take it back up. So if you're trading this W formation, you would have entered here. But now the problem with this one is that the trend is to the downside. So this didn't last long. The trend was to the downside. So this didn't last long. But if you're going with the trend, if you're going in line with the trend to the downside, then this would be what you were looking for. And if you look at this, what can we see? If you draw a line at the upper part of the of the Asian range, right? So this is the upper level. So you can see this is the upper level here. What happens? After price breaks to the downside, actually inducing people to take sales, then going back to hit the stop loss of people that took sales here, chasing this breakout. What happens? Price then goes to the upside and bounces off of this high like this, right? What exactly is that? That's what I told you, that price is gonna do like this and then bounce off of there and then reverse. This is the type 2 pattern that I showed you about. So the first one was type 1. This is the type 2 one where they don't break out. So now you can see a visible breakout of this range, but you can see that they came to tap the highs, gave you the M formation, and then reversed. If you took sales, you can take sales on this hammer. You can take sales on this hammer, or you wait for this other candle here to form, and then you enter your trade. And you can see this went for a nice move to the downside. All right. The reason why I took buys here is because this is more complex. I was working off of these lows here looking at a larger W formation, but I won't get into that because that's more complex. Also, if you look at this, you can see those of you that know my strategy, you can see they broke out of the wedge and all that. Right. So now, also not only that, let me show you another example of the strategy. Now, this one is gonna be wait, let me see. I shared this one on my Telegram. Let me, I think it's Eurocard. Yeah, Eurocard. So this went for about 70 pips to the upside, right? And I did an analysis where I sent to my Telegram. I showed them the before. I sent it before it happened. So this is the picture of it before. If you can see this, so you can see this is the picture of it before. Dang, what's that? This is a picture of it before. You can see we have downtrend. So what I was looking at that point, at this point here, you can see the Asian session range. This is the Asian session range here that lasts for 8 hours. So you can see this is the consolidation. This is going to be the middle level of the range. So now in this example, you can see at first they were at the lower level of the range. Then they went to the middle. So at this middle, I told you at this middle, you can't really know where they're going to break out. But in this example, they started breaking to the downside. I was expecting a reversal off of these lows here. So you can see price went to this low, price was breaking to this low. Now remember, what was the pattern that I showed you guys? I showed you guys this pattern here, where they're going to consolidate, break to the upside, give you an information, and then reverse. The inverse of that is going to be where they're going to consolidate, break to the downside, give you a W formation, and then reverse back up, right? So what I'm expecting here is I expect consolidation, break to the downside, W formation, and reverse back up. Going to hit this target and then hit this target. And what do we have? So this is the before after. Look at it well. This is the before analysis. All right, and then this is the after analysis. So let me turn on my indicators so you can see this. So this is the trade here. So you can see they broke out. They broke out of this range. They broke to the downside like this. What do we have? They gave us the W formation. Change it to inline charts. You can see we have this W formation here. Let me just clear this out so you can see. So we have the W formation here, right? After breaking to the downside, we have the W formation. You can even see a mini pattern here like this. But this one didn't come to the exact highs. It didn't get to the highs. It came close to the highs though. Came close to the highs. So they did this, came back down here and did this, right? So if you were to take this trade, where would you be buying? Remember, I told you you'll be buying on the second leg here. This is where you're going to be entering for a buy. You're going to be entering right there for a buy on the second leg. And then what do we have? Price moves all the way up for actually even an 80 pip move. It's actually an 80 pip move to the upside, although it took 2 days to go there. So this is the first day, second day. So this was on Wednesday. It took 2 days to get to that high. Now, what you're gonna also notice here is, although this day was choppy, what you're gonna notice on this day is if I turn off, let me turn off this stuff so that you can see this clearly. I don't like it's being messy. So you can see this line that I drew here. The reason why I drew this line out was because I knew that this was, remember, let's start again. 8 hours, right? We're looking for 8 hours of consolidation. What do we have here? We have 8 hours of consolidation here. Where did it stop? 8 hours right about here. 8 hours. So coming to the London session, what do we have? we didn't get the breakout that we were looking for, right? We didn't get that breakout that we like. But what do we have? We have the type 2 pattern where we have the W formation at the bottom here before going back up. Although they even gave us three taps to the lows. So now, are they at the bottom or are they at the top level of the range? Let's draw a 50% range here. 50% range here. So now we can see that they are at the lower level of the range. Initially, they were just swinging up and down at the middle. Then they came to the bottom part, changes to a line chart. You can see we have the W formation 3 times like this. And then what happens? Price reverses to the upside. So you would have caught a trade here, or here, or maybe even here at New York session, and they continue back up. Remember, I told you now that New York session is usually used to either reverse or continue the trend. Now, let me show you. This is a perfect example of what I talked about when it comes to the sessions. So now, what do we have here? You can see this gray box is Asian session, this green box is London session, and this red box is New York session, just for context. So now Asian session, I told you, is used for accumulation, consolidation, which is what we have here. London session was used as a breakout, which is what we have here, right? That's the breakout. And the New York session is just reverse. This is New York session all the way here. New York session, I told you, if they are still at these lows, they'll use New York session to reverse the trend back up, which is what we see here. Coming to the next day, what do we have here? Asian session was used for the consolidation. London session was used for, we didn't really get the breakout, right? But they came and tapped this area here and started to reverse over there. I remember I told you that New York session, if New York session is going to continue this trend, they're going to do a pullback and then continue, which is what we have here. As New York session begins, we have a pullback and then price continues back up. That pullback usually, I noticed that pullback usually happens during that New York session. If they're gonna continue the trend. If you look at this trade that I entered here, the trade was going up. The trade was going up. This is New York session here. What do we have? Coming to New York session, we have that pullback and the price continues back up. Right. So this is a strategy that I trade every single day. This strategy that I've been trading for the past 3 years now. And I will keep on trading because it works and it works very well. So if you like the strategy, you can trade it. If you want to learn more on how I trade this strategy, I created a trading course called the Market Maker Mastery. You can click the link in the description to learn and enroll from the course. If you want to learn more on how I trade this strategy, if you want to join my free Telegram where I share free analysis, trade signals. No, not really trade signals. Where I share free analysis, free insights, market insights, education, and all that. You can join the free Telegram below. And if you have any questions, let me know in the comments, and I'll see you guys in the next one. If you're not subscribed, make sure you subscribe, and I'll see you guys in the next one. Peace.